Grow your money. Ever wonder how some people seem to have their money magically multiply? It's not magic, it's investing. Investing is simply putting your money to work for you. Instead of sitting in a savings account, your money can grow much faster in the market. It's like planting a seed that grows into a money tree. Think of it this way, if you put $100 under your mattress, it'll still be $100 next year. But if you invest that $100 wisely, it could potentially grow to $110 or even more. This growth happens over time thanks to the power of compounding. Investing is the key to building wealth, reaching your financial goals, and securing your future. Whether it's buying a house, retiring early, or simply having financial freedom, investing is the path to get there. So, are you ready to make your money work for you? Let's dive in. Before you start throwing money around, let's understand the basic building blocks of investing stocks and bonds. Don't worry, it's not rocket science. Think of stocks as tiny pieces of ownership in a company. When you buy stock in Apple, for example, you own a small part of Apple. If Apple does well, the value of your stock goes up. But if Apple struggles, the value might go down. Bonds are a bit different. They are like loans you give to the government or a company. They promise to pay you back with interest. Bonds are generally considered less risky than stocks. Understanding the basic difference between stocks and bonds is crucial for building a diversified investment portfolio that aligns with your risk tolerance and financial goals. Now that you know the basics, let's talk strategy. There are many ways to invest, and the right approach depends on your goals, risk tolerance, and how hands-on you want to be. If you're comfortable with more risk and want to actively manage your investments, individual stocks might be your jam. But if you prefer a hands-off approach and lower risk, index funds or mutual funds could be a better fit. These funds pool your money with other investors to buy a basket of stocks or bonds, providing instant diversification. Remember, there's no one-size-fits-all approach to investing. It's about finding what works best for you. Ready to dip your toes into the investment pool? Great! Here are some beginner-friendly tips. Start small. You don't need a fortune to begin investing. Start with a small amount you're comfortable with and gradually increase your contributions over time. Do your research. Don't just blindly follow the crowd. Take the time to understand different investment options and choose those that align with your goals. Be patient. Remember, investing is a marathon, not a sprint. Don't expect to get rich quick. Be patient, stay invested, and let the power of compounding work its magic. Starting small allows you to gain experience and build confidence without significant risk. Remember, even small, consistent investments can add up to big returns over time. Section 5. Don't be a fool with your money. Common mistakes. Even seasoned investors make mistakes, but you can avoid some common pitfalls by learning from others. First up, emotional investing. Don't let fear or greed dictate your investment decisions. Stick to your plan and avoid making impulsive moves based on short-term market fluctuations. Next, not diversifying. Don't put all your eggs in one basket. Diversify your investments across different asset classes like stocks and bonds to minimize risk. And then there's chasing returns. Don't blindly chase the latest hot stock tip. Remember, past performance is not indicative of future results. Focus on building a well-diversified portfolio for long-term growth. Investing can be intimidating, but by understanding common mistakes, you can make more informed decisions and increase your chances of success. Section 6. Diversification. Don't put all your eggs in one basket. Remember the age-old saying, don't put all your eggs in one basket? Well, it holds true for investing too. Diversification is key to managing risk and maximizing your chances of success. Imagine you invest all your money in a single company, and that company goes bankrupt. You could lose everything. But if you spread your investments across different companies, industries, and asset classes, you're less likely to be wiped out by a single event. Diversification is like having a safety net for your investments. It helps protect you from market volatility and ensures that even if one investment underperforms, others can pick up the slack. By diversifying your portfolio, you're essentially spreading your risk and increasing your potential for long-term growth. Section 7. The long game. Patience is key in investing. Investing is not a get-rich-quick scheme. It's about patience, discipline, and playing the long game. The stock market will have its ups and downs, but over the long term, it has historically trended upwards. Think of investing like planting a tree. You wouldn't expect it to grow into a mighty oak overnight. It takes time, care, and patience. Similarly, building wealth through investing requires a long-term perspective. Don't get discouraged by short-term market fluctuations. Stay focused on your goals, ride out the volatility, and let the power of compounding work its magic over time. Section 8. Seeking expert advice. When and who to ask. While it's essential to educate yourself about investing, seeking advice from a qualified financial advisor can be invaluable, especially for beginners. A good advisor can help you define your financial goals. They'll work with you to understand your aspirations and develop a personalized investment plan to achieve them. Choose the right investments. Based on your risk tolerance and financial situation, they'll recommend suitable investment options. Navigate market volatility. They'll provide guidance and support during market downturns, helping you stay calm and make informed decisions. Remember, financial advisors are not just for the wealthy. Many advisors work with clients of all income levels and can help you make smart investment decisions regardless of your starting point. Section 9. You got this. Take the first step to investing. Investing might seem daunting at first, but remember, you don't need to be a financial expert to get started. By understanding the basics, making informed decisions, and seeking professional guidance when needed, you can embark on your investment journey with confidence. Start by setting clear financial goals, learning about different investment options, and determining your risk tolerance. Then, choose a reputable brokerage account, start small, and gradually increase your contributions over time. Remember, the most important step is the first one. So take charge of your financial future and start investing.